Welcome back to Face, Mr. Keller. How are you, buddy?
Thanks, Dale. I'm well, and thanks so much, Blake. Good to be back with you guys, as always.
Yeah,
Good, good, to-
yes,
good to see you.
yeah. I see you real active on X, doing some spaces, teaching people how not to step on landmines. Right, buddy? Isn't that really one of the most important things we can do? Is besides, actionable ideas that may make money, is to help people avoid making the big mistakes that can take them out of the game.
100%. And I think what you got to remember is what I was told is that analyzing the charts is the easy part. Actually doing what the charts tell you to do, that's the tough part.
because
So
that because that's not on our screen; it's in our head.
that is
The
something
the
that happens
the
between
other
our ears,
screen.
Dale, and that's where
Yeah.
the challenges tend to fester.
All right. So I want to sell 10 big S&Ps right here at the market. Am I crazy?
I mean, so here's the thing, right? I have two hats that I like to trade. I have
All right.
the trend follower hat, and then I have the contrarian hat. And I would say my trend follower hat sees such a clear, persistent uptrend that has
Yeah.
been the story through most of 2024. But as we make new all-time highs again this week, it's just a friendly reminder that, higher highs and higher lows, that's an uptrend. And
Right.
so for like a medium-term, long-term time frame, it makes sense to assume that that's probably going to persist. As a
Okay.
contrarian, I see a lot of benefits to selling into short-term strength like we've seen here. And that's been a story that's worked remarkably well, especially since the August low. We've had a pretty clear stepwise motion to the S&P, and that means looking for opportunities at the upper end of the channel to bet a mean reversion to the lower end of the channel is a tried and true
Nice.
sort of short-term swing trading approach. And I think
Okay.
we're sort of at that point. I mean, the real story, I think I caught the end of your conversation there previously about the Fed meeting coming up here 2 weeks out, inflation data between now and then, and until the beginning of the new year, I'm sort of assuming that we continue to see strength until January.
Okay. Again, I'll say universally embraced narrative that everything's fine to the end of the year. Do you hear anyone saying, look out in December? And, they're really, I couldn't think of a negative December, but I interviewed Mike Kramer and he said 2018. He reminded me of 2018 was a pretty negative December, but we were in much different conditions. But, Dave, I look for chinks in the armor.
Yeah,
And I really think NVIDIA is a chink in the armor because this was the Bitcoin of the last couple of years. Okay. And when they reported earnings a week ago, the next day
hmm
they cleaned out all the shorts. The
yeah,
earnings were not bad, and they're barely hanging on under 131. It looks like it could go to 112, and we're not that far from 31 with NVIDIA. So could the market handle a big correction in NVIDIA by just rotating like it has over the last several years when people find out the emperor has no clothes, someone
yeah.
comes and throws a robe over him? Buddy, you think that could be happening? Or they'll just throw that robe over the emperor and no one will notice again?
Yeah, so a couple points there, and I would say first off, yeah, December has been weak. Like in 2022, it wasn't particularly a strong December, right? We kind of had a brief pullback, but it was only like a 3 to 5% kind of garden variety pullback. It wasn't much of a sell-off. 2018 is the last time we had a really negative Q4, but the market had been selling off in November already, so it was sort of a
Okay.
weird fourth quarter anyway. So I don't see, and I think that's where a lot of people get caught into this kind of constructive narrative in December because it's pretty consistently a positive month. January is where some big diversions can happen and some big disagreements in terms of historical evidence. There have been plenty of weak Januaries for sure, and much more common. So I think it's probably where it comes from. The challenge in this market here is you have a bunch of stocks, I would argue, not just Nvidia, but Apple's sort of breaking out, but if you look at, Meta's still not quite getting above resistance around 600.
You will.
Amazon and others. I mean, you have stocks that have actually made highs that have been struggling to sort of push above there. And the
Google, I'm short before the Justice Department thing. Look what it's
Yeah,
hanging on to. That's an
yeah.
ugly chart.
It's not a good chart, right? It's not, and it's
Yeah,
definitely not a great chart. And I think the market has been pricing in that the Magnificent Seven stocks are all great and all look like, Nvidia kind of back here, where you just have this
yeah,
brilliant sort of consistent uptrend. A lot of them have stalled out here in the fourth quarter, have stalled out around earnings. And I would say one of the potential catalysts would have been a huge earnings win that injects like a new up leg and consistent breakouts for these stocks. And you're really not seeing it until Apple this week. You're really not seeing those dramatic breakouts in some of the growth leadership names. And Nvidia, to be honest with you, is by far, the most attractive semiconductor chart. I would say the average semiconductor chart looks like absolute garbage relative to
yeah.
that. Like,
SMH. It hasn't made a new high since last July. Is that
no,
when it
and
was?
you have SMH, you have things like monolithic power systems that are all part of this group that, I mean, look really,
Yeah.
really ugly. So Nvidia is sort of like the canary in the coal mine kind of visual. So I would
Okay.
say so two things, right? I would say, how high can the S&P and the Nasdaq drive if Nvidia is not breaking out? I would argue not much. And I would say the
That's
kind
where I
of
have
bear
to.
case going into the beginning of next year is that these growth leadership names are unable to mount any significant push above resistance and hold that. And I
Yeah.
would particularly be looking for divergences, and I think that's one of the issues you have with Nvidia right now. If you look at the new high in
Yep.
October, when it made a
That
new
was
high for the
confirmed.
year, the new high in November, the new high in late November, all of that is coming with weaker momentum. So you
Yeah.
have kind of those classic topping signals. That's one of the check marks I have in a market top checklist that I keep are bearish momentum divergences. And I'm
Yeah.
I'm not thrilled that I'm seeing that on a chart like Nvidia right about here, right? When you want to see it breaking out on stronger momentum, on stronger volume, you're kind of seeing the opposite.
Yeah.
So the question is, is there significant upside potential without those stocks breaking out? I would say no. Is there an opportunity for other areas of the market to show strength? There is, and that's where
Yeah.
you look at like regional banks and other things that would do better if the Fed continues to lower rates, which I think they do. If the yield curve gets to more of a normal shape, which I think it does, those are the
It
kind of
is.
things that benefit other groups, things like regional banks and others. And so I think it's a rotational time at least, and maybe a corrected period going into the beginning of next year at worst.
Yeah, because the banks have been the relative strength leaders. So
Yeah.
look like they started to correct yesterday.
Hmm.
Dave, do you have a view on? I know you have a view. You think the Fed's going to ease, but
Hmm.
on the long end, on duration, say TLT, we could take a look at. Do you
Sure.
think the move that we've had just based upon it wasn't really any numbers. It was just based upon the confidence of uh, President-elect Trump's pick for Treasury Secretary. Do you think that move we had from 90, we gapped up on the announcement, is justified
So
on
there's
that
sort of the
news?
macro answer to that. There's the technical answer to that, right? I mean, I would say I'll start with the technical one because that's my game.
Yeah,
I,
it
I would
looks
say
good.
that, from a technical perspective, this is what you call a breakaway gap, which is where the
Yeah,
market's consolidated TLT around 90 here for about 3-4 weeks. And then
yeah,
we sort of have that initial gap higher. And that's called a breakaway gap because the market's hitting equilibrium and then something changes. And to your point, right? Treasury Secretary announced bonds rally, yields come off as a result. And that breakaway gap is usually the beginning of sort of a new move. Compare
yeah,
that to a gap that happens at the end of a big uptrend, which you'd call an exhaustion gap, which is sort of the opposite, that
right,
last move higher. So
right.
that doesn't definitely has the markings of sort of an initial move higher. And bonds have been selling off, right, since mid-September to around,
Yeah,
early mid-November. So this all of a sudden is a different phase and a different look. And this is causing the 10-year yield to obviously come down, where it
right.
looked like it might be getting back up to highs from earlier this year, all of a sudden breaking down and starting to come off a bit. The kicker, and I would say it's for me, I would say from a big picture perspective, it's less about the 10-year point and it's more about the shape of the yield curve, right? And that's why I mentioned banks, right? if you look at 2021, which is sort of the last time the market looked like this, the equity markets were very similar in terms of 24 and 21, sort of like a nice consistent uptrend, minimal drawdowns, low
Yeah,
volatility kind of move. But in 2021, we were coming out of the COVID low. The yield curve
right.
was very normal shaped because the Fed was keeping rates super low. And that's sort of how a normal yield curve in with optimism for economic growth kind of looks. But then you compare that to what we've been experiencing over the last couple of years. We have an inverted curve, and this is the shape of the yield curve on the left side. So the short
Yeah,
end is very high as the Fed is keeping short-term rates elevated, but the long term, which is more driven by, expectations about economic growth, is much lower. And what's happened here in the last, month is all of a sudden we've gotten to a relatively flat yield curve where the long-term yields and the short-term yields are very similar. Now, that usually happens just before we kind of get to a more normal shape. And the problem I would have with that is that going into next year, would you have a yield curve that's been inverted for a while and then goes back to a normal shape? That usually means equities are selling off for the next 6 months, right? The next 6 month returns after the yield curve normalizes are actually not particularly good. The long-term rates, like a year plus out, are actually just fine. But go back to like 2007 for a classic example of the yield curve inverting, and then the yield curve becomes more normalized, and that's right here, right? That's just before the great financial crisis sell-off really accelerates. So a lot of people think the yield curve gets more normal. Okay, that's good. That means we're back to optimism and everything. But stocks actually usually sell off soon after that.
yeah, I've heard that. That's a dangerous period.
Yeah,
Is
so
when they
I'm
uninvert.
concerned by the similarities now versus what we've seen at some of those other major tops. And again, it just doesn't make me super optimistic going into the new year.
Okay. Natural gas had a real nice move. I assume that there are natural gas issues that you're paying attention to.
I usually look at the UNG, and I would say the general assessment on natural gas prices has been just
Look
a
very
consistent
solid.
weakness. And I
Yeah,
think, from a technical perspective, I tend to think of charts as guilty until proven innocent or innocent until proven guilty. And this is definitely the former, right? It's guilty until proven innocent. This is a chart that's consistently been in a downtrend. We've had some counter trend rallies, but you note that rallies tend to be unable to eclipse the previous peaks. We're not getting above a descending 200-day moving average on the UNG.
yeah,
So that's on a chart like this. I just have an alert set for when that would
yeah.
finally break, and then that tells me to revisit it as a potential trend reversal. We're just not seeing it, and obviously we're seeing selling into strength on these previous rallies in the last
But we
in the last couple of
started
months.
off like the TLT did with the breakaway gap off the bottom, right? Is that a
Here,
breakaway gap too? Yeah,
for sure, for sure. And then the question
yeah,
is, right? And so there's that initial move, 100% right. So we see additional buying. Then the
yeah.
question is follow through, right? What's sort of that next move higher? And that's where you need to see, anecdotally additional buyers coming in. That's where we need to break above resistance, where we need to see improving trend performance on stronger volume. And that's what we just don't see. We see the initial signs of a sort of a buyable bounce. We see a bounce off of support. At the UNG at least, there's been fairly consistent support here over the last 6 months or so. But the question is, what's the sustainability of the uptrend? And that's where natural gas has kind of failed to follow through. And with a lot of
Okay.
commodities as well, obviously, have been struggling here as of late.
Well, I'll give you a difference. At the prior highs, the public was very long and commercials were very short.
Mm,
But where we're at right now is the complete reverse, that commercials are huge net longs and the public is huge net short. So there's plenty of
mm.
fuel for a short squeeze.
Very interesting. So
Yeah, check it out.
I've talked with Larry Williams often about the commitment to traders and positioning data, and he's a huge fan of what you would just
Yeah,
describe.
yeah.
And I would agree.
I'm a huge fan of Larry Williams.
Me too.
And you know who else? I really like that Dave Keller guy. You ever hear of him?
I
Well,
follow his
he's
work. Yeah.
I mean, it's he's religious with his chart. So, anything else top of mind for you, Dave, that you want to get around to? Because
Yeah, I mean, I would say the other thing, I mean, the when you have a market that's in an upturn, at least equities, I'm
yeah,
always looking for signs of disagreement, right? Signs that tell
Yeah,
you something's different, right? So again, I think, while something like natural gas, guilty until proven innocent, I would say the S&P innocent until proven guilty.
right.
Trends are positive. So what you look for are like the momentum divergences, like we saw with Nvidia. I'm starting to see a little bit of that, but not as widespread as what you would usually see at a major top. The other thing you would start to see would be some breadth divergences, right? Where breadth is starting to give you warning signs. We saw some of those in October, and this is a chart. It's a little busy,
Yeah,
but just real quick, it's the S&P on the top. This is the
right,
advanced decline line for the New York
right.
Stock Exchange in blue. We have the percent of S&P names above their 50-day moving average, kind of good short-term breadth measure. We have the bullish percent index, which is looking at point and figure charts and what percent of them are giving a bullish signal. And then offense over defense, consumer discretionary versus staples. So when this ratio is going up, that means things you want are outperforming things you need. That means investors are more, positioned for offense, positioned for optimism. And most of I mean, I would say none of these are giving any significant warning signals at the moment. They're all kind of moving along very nicely. But this
Yeah,
is the chart, and probably the chart I'll be watching going, through year end into the beginning of next year. Once we get through the Fed, once we kind of get through the holidays, and you wonder what's going to happen next, it's going to be all about whether there's breadth support. Because if Nvidia and Apple and others are struggling to really advance, Meta and others, you'd need a lot of other stocks doing quite well, which means breadth indicators would need to remain pretty strong. And if you'd see
yeah.
weakness in breadth, that's probably a really dangerous sign for stock. So you'd be looking for advanced decline lines to rotate lower. You'd be looking for the bullish percent index, which is now kind of elevated, to come back to normal levels. And you'd need to see defensive sectors like utilities, like REITs, like consumer staples start to improve. You're not seeing any of those signs necessarily, but that's what I would be absolutely looking for. And one of the classic signs of a major top is that defensive sectors start to improve, and it's often pretty early in that pullback phase. You've seen a
Yeah, we had
bit of an
some of that
improvement
going
there.
on. Didn't we have some of that going on about 6 months ago?
For sure,
Probably.
for sure.
Yeah. We
Yeah, and
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 this
and I would.
reading and this reading at 175 you have up there, is that one of the highest readings you've ever seen in that ratio?
Here, it is for sure. Yeah, and this is
Okay.
using the equal weighted ETFs, the two of them. And so
Okay.
the fact that we've had the consistent, I mean, if you look at the last 2 years, I mean, it's been, it's had some periods of kind of coming down, but it's a classic kind of bull market configuration
Yeah.
where institutional investors have not really gotten super defensive. We did see that, and that's this chart. This is looking at the relative performance of utilities, consumer staples, and real estate. And back in July, August, you started to see, and this was kind of one of the big warning signs that we observed in August, was that all of a sudden you saw defensive sectors really start to rally. And that is a big sort of red flag that goes off for me, because that usually only happens when institutions are getting pretty defensive because they can't go to cash. They have to be invested in stocks. So they just get to the most defensive areas they can, low volatility, higher
Yeah.
dividend paying sectors like these. So we've seen a bit of that here in November. You've seen a bit of improvement in the relative performance. I think that's a theme to watch for, because that is usually sort of the death knell for a consistent bull market, is this surge in defensive sectors.
Do you have a view on housing? I've talked to a few people who are seeing cracks, and I started looking at D.H. Horton and Lennar, and they don't look
Yeah.
that great.
No, and so these names, a number of them had really good runs into September. So there's
Yeah.
D.L. Horton, there's Lennar. You can see they all kind of made peaks in September, and from
Yeah.
there have really started to roll over. I mean,
Yeah.
to be honest with you, I think when you think about rates, this is, the 10-year sort of popping back up was not a great look for these names. They rallied pretty well when the 10-year yield was coming down and pushed below 4%. That was sort of in that July, August, September period. So all of a sudden, home builders looked really good because homes became a lot less expensive, or certainly the perception that would happen. That sort of trend reversed, and so that's changed it a bit. That TLT chart we looked at earlier, I think, is going to be key here. If you do see bond prices sort of continue to push a bit higher, if you see rates come down a little bit, that's where people, I think, would see opportunity for home builders going into next year. This is all about, I think, how expensive homes are going to be. If you do sort of buy into the Fed doing multiple rate cuts into next year, while that doesn't necessarily affect the long end of the curve, we could see long-term rates come down a little bit further, bonds rally, and that would be the sign I would be looking for to get back in. So the long-term charts are not particularly horrible, right? I mean, we're still sort of in a good long-term uptrend.
Right.
But we've pulled back quite a bit from previous highs, and it's not showing the strength that it was back at the end of like Q3.
Yeah. Okay, Dave. Best place for people to follow you, and do you have a schedule for when you appear, when you do your Spaces stuff on X? How do people follow you around FinTwit?
Yeah, no, I appreciate it. And thanks again, Dale and the team there. It's a pleasure to chat with you anytime. I'll look forward to our next discussion. Marketmisbehavior.com is my website. And yeah, I do a daily market recap show. We're running it at 5 p.m. Eastern now. And I do that on YouTube, on X, on LinkedIn, on Facebook. So just look for me or Market Misbehavior in those places. And yeah, on X, I'm at DKellerCMT. So follow me
Yes.
there.
Dave, thank you so much for over the years coming here and giving a real balanced look at the market. And if you listen to Dave speak, he speaks in terms that aren't about opinion, just about what he's seen. David talks about what he sees, not what he hears. And you could learn that from him. Follow him, and you're going to learn a lot about technical analysis, just like you did over the last 25 minutes. So, Dave, appreciate you coming here and sharing your hard work over the years.
No, it's a pleasure, Dale. Thanks again. Have a great holiday season. Look forward to reconnecting in the new year.
All right, we'll see you in the brave new world then, Dave, next year.
That's
All
right.
right. Dave
Take care, my
Keller,
friend.
everybody. Thank you, my trading warrior brother. That's a wrap, everyone. And you could join the team in about, I don't know, 18 minutes on the Morning Edge. See, people like you, Dave. They're all saying, yeah, you like his YouTube channel? Okay, good. Okay. All right, you're welcome, Saloom. Remember, don't just count your pips, count your blessings. I'll see everyone tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.